Hi, my name's Steve from Promise Money, and if you're watching this video, it's probably because you'd love me to tell you what's the best rates you can get on a secured loan at the moment. Well, the truth is I can't tell you that because I don't know when you're watching the video and they change all the time. But what I can tell you is how you can possibly improve your chances of getting the best rates, and what sort of factors go into that, so that you can prepare yourself and think about, right, is now the time to apply and how much do I want to go for. So let's just talk about the first fundamental thing, getting advice. There are lots of companies online at the moment offering secured loans, and the comparison sites will channel you down the route to a secured loan expert. Just beware of that, because a secured loan, you're raising cash. Okay, you might have looked at an unsecured loan, but you're looking to raise cash and you're offering a house as security. So what you need to do is make sure whoever you talk to for that is going to compare a secured loan against a remortgage, because one might be better than the other. Secured loan, a lot of the online comparison sites just put you into a secured loan specialist, and all they're going to offer you is a secured loan. You won't get that comparison. But the real important factor about advice, if I can give you a real simple analogy, is imagine you were applying for a loan for £50,000. You said, I want a £50,000 loan, and then somebody who's giving you advice says, did you realise that if you had a £49,000 loan, it would be 1% cheaper? You'd want to know that, wouldn't you? I want a £20,000 loan and I want it over 10 years. And an advisor would say to you, do you realise if you took it over 12 years, that improves the affordability situation? So I've got another lender over here who could do it for you at 1% cheaper, or whatever that is. That's where advice comes in. So advice is really, really important, because you know what you want, but it might not be the best for you. Yeah, and there's alternatives around that. So the advice piece is really, really important, to not just to make sure the loan is suitable, but to look at the whole market and look at the parameters. But let's talk about some of the factors that you can do something about to put yourself in the best possible position to get a secured loan. So the first thing is prepare, but income. If you've just started a new job, then that could mean for many lenders that they won't consider you until you've been there for 6 months. So if you're applying and you're 5 months in, then in a month's time you might get a better deal. Now that doesn't mean don't apply now, but make sure when you're talking to your advisor, you're saying, look, I would have been there 6 months, so let's do it on that basis. Your advisor should spot that anyway. But a lot of secured loan advisors these days, they rely on a piece of technology. And when you rely on technology, you stop thinking. It's a real danger. So in your job for 5 months, bang, the technology will come back and say, right, well, we'll forget all these lenders over here where they require to be 6 months in your job. We'll just show you the lenders that are 5 months in your job. That's not a great place to be. Once you've been there 6 months, it's less of an issue, but technology can hold you back. So think about time in job. Type of job as well. Employed, self-employed. If you're self-employed and you've just started, it's going to be tough getting a secured loan, because affordability is really, really important. If you've been going for 18 months, there are lenders who might look at it with one year's accounts, but once you get to 2 years, there's an awful lot more lenders who are going to say, all right, we're prepared to look at this now. So all of a sudden you open yourself up to a much wider market, much more lenders who are prepared to look at it for you. So it's about how you can evidence your income as well. That's the other thing. And then you might have other income in the background. Some lenders will take that into consideration, some won't. There's not a lot you can do about that, but just be aware that, you know, secured loans are pretty good in that area, but some lenders will take bonuses and different things and treat them differently. So it's really about, sometimes it's not about how much you earn, it's about what lenders will accept from how much you'll earn, and what they'll allow to go in at the top of their affordability calculations to make it all work for you. Credit. I think there's an assumption out there that credit score is king, and it's not. A lot of lenders do rely on credit score, but they have their own credit scores that they create. So it's not about that number. You know, when you go onto one of these credit search facilities and they say, we'll give you your credit score and it's so many out of 1,000 or whatever, that one number, isn't that relevant? Because a lot of secured loan lenders don't even do a credit score. They go a lot further than that. credit score, I'm not a big fan, I've got to be honest. What they'll do is they'll look at your credit search, and which could be 10 pages long, of all of the credit you've ever taken out in the last God knows how many years, and they'll go through it all line by line and say, right, are we happy with that? Are we happy with that? So it's not about credit score, it's about manual underwriting. But what is important is don't let your credit get screwed. You know, have as good credit as you possibly can. Don't miss payments. But timing comes into this as well, because you might be thinking, oh crikey, well I had a CCJ 5 years ago, and that's going to ruin my credit score. Well, a lot of lenders disregard CCJs over 12 months old. Or other lenders might disregard them if they're less than a certain amount, or if they're satisfied. So that's another factor. It could be that you've got some credit right now, but in 2 months' time, that's going to drop off the register altogether, or will no longer be relevant to that lender. So applying now, you could be a rate up here, or you could be declined altogether. Applying in 2 months' time, it could be absolutely fine and dandy, because all of a sudden the lenders say, oh right, it's over 12 months old now, we're not worried, or it's over 2 years, we're not worried. And all of a sudden the whole of the market opens up to you. So my suggestion on that is, if you have got bad credit, is run a full credit search, one that gives you all of the information, not a credit score, rubbish. Full credit search gives you all the information there. Give that to your broker and say, right, when should I apply? When will this credit disappear? What's the optimal point? And that's how to approach that. So credit is really, really important. Keeping your credit as good as it can be, but timing comes into it as well. Talk to your broker about that. Loan to value, that's also a factor. The higher the loan to value, and I'm sure if you watch videos you'll know what I mean by that, but if your property is worth £100,000, you've got a mortgage of £50,000, it means that your mortgage is 50% of the value of the property, that's 50% loan to value. You borrow another £20,000, that means your total borrowing goes to £70,000, that's 70% of the value of the property, 70% loan to value. It's as simple as that. But the higher up the loan to value curve you go, then the higher the rates. Now you can get loans up to 100% of the value of your property, but if you're borrowing at 55% of the value of the property, same as with mortgages, you're going to get a better deal. So knowing where to optimize those, because it's, and coming back to the example I quoted at the beginning, it'd be very easy to say, right, I'm going to go for a loan and I want this amount, so that's what I want, and that takes you to 81% loan to value. But getting it to 79.9% loan to value could make a massive difference to the rate that you're offered. Again, advisor's going to tell you that. You can work out your LTVs yourself, but an advisor's going to know whether it's a critical one. It makes a difference to the lenders. So loan to values is important. So that also means the loan amount is important, of course, because what we're saying there, you can't really alter your loan to value. Your house is worth what it is, your mortgage is what it is, unless you're thinking of paying a chunk of it off at some time soon. So it really comes down to how much you borrow. It's the loan amount can have a big impact on the rate. And when you're talking to an advisor, you know, you might have an amount in mind, but, you know, say, well, if I was to bring that down, how far would I have to bring it down to get into a different rate band where I might get a better deal? So that's important as well. There are other factors that come into the equation, but then they're factors that you can't quite do so much about. You know, you can alter your loan amount, you can wait before you apply, you can wait for some credit to fall off, you can wait till you've been in job a little bit longer, you can wait till your income situation improves. Your age, by waiting, it doesn't help. But some lenders have a maximum age, and they vary between lenders. So if you are of a certain age and you're getting on a bit like me, then that could be a factor. Again, talk to an advisor about that. Debt consolidation, it's a factor, but most secured loan lenders are really good at debt consolidation. It's how, you know, it's something they've done for years and years. Mortgage lenders aren't so great at it, but secured loan lenders, yeah, pretty good at debt consolidation. But there's a factor. Property type. If you live in an ex-council flat, some will, some won't. If you've got a property which is an unusual construction, some will, some won't. Like I say, you can't do anything about it, but that is a factor that's going to feed into the loan amount you can get and the rate you're going to get, because there's less lenders. And what you want to be doing is opening up choice. The location. If you live out in the Outer Hebrides, there aren't so many lenders who will lend in the Outer Hebrides as there are who lend in mainland Scotland, and even more will lend in England and Wales. That's simply because there's different processes in place in different areas, and maybe they've just not tapped into that area of the market yet. Loan purpose, that's another factor. Some lenders will lend for a certain purpose, others won't. I suppose coming back to property for a moment, condition is a factor as well. Very often a secured loan will there'll be a valuation carried out on your property. If you've just ripped your kitchen and bathroom out, you're going to struggle in most cases, because that's all of a sudden your property is no longer mortgageable. So get the secured loan agreed before you rip your kitchen and bathroom out. If you're refurbishing, then you've got the money. Then you can rip it out and put the new one in. So there's lots of factors that go into getting the best rates, but the best thing to do is start planning early, get an application in, talk to an advisor, and talk to them at that point about, right, okay, if I was to wait, or if there's anything I could change, is there anything that would improve the rates that I can get? Because that's what you want to do. You want to get the amount you want at the best possible rate, provided it's suitable for your overall circumstances, and an advisor will cover that off as well. Now, bear in mind, if you're talking to an advisor, generally speaking, they're going to be happy to do a full fact find with you, explore the market, check out your affordability, do a right load of work, and come back to you and say, right, this is what we suggest, or indicatively, this is what we think you can get, and that's not going to cost you a penny. If you decide to go further, there may be fees, etc., that are involved, but getting to that point isn't going to cost you a penny, and it's a lot better than going on a comparison site, because anything you get from that is going to be pretty meaningless. So I hope that's been helpful to help you formulate a bit of a plan and strategy of how to get the best rates for secured loans. It's really down to your circumstances and timing, and making yourself as attractive as you possibly can to as many lenders as you can. That's me, Steve Walker at Promise Money. Hope you found it useful. Please don't forget to like our videos, subscribe to our videos, tell your friends and family all about us, send us crisps and chocolates and things if you think we've done a good job for you. No, I'm joking. And check out our YouTube channel, Promise Money, and if you need more information, go to promisemoney.co.uk. That's it from me for this time. Thanks a lot for watching. Bye bye.